If you've spent any time in the crypto world, you know this is the ultimate debate. Bitcoin versus Ethereum. It's a question that divides investors, sparks passionate arguments, and ultimately shapes the future of this entire industry. Today, we're not just going to talk about their prices, we're going to dissect their core philosophies, their technology, and their potential to dominate the future. By the end, you'll have a clear understanding of which one aligns with your investment goals. First, let's start with Bitcoin. Bitcoin is the king, the original, the one that started it all. Its investment thesis is simple, elegant, and powerful. It's a store of value, it's digital gold. The key to Bitcoin's value is its absolute scarcity. There will only ever be 21 million Bitcoins created. This fixed supply is its most powerful feature, especially in a world where governments can print fiat currency endlessly, leading to inflation. Bitcoin is a hard asset in a soft money world. It is non-sovereign, censorship-resistant, and decentralized. No single government, corporation, or individual can control it. This makes it an ideal hedge against inflation and economic uncertainty. When traditional markets get shaky, investors often turn to hard assets like gold. Bitcoin is increasingly being seen in the same light, but with the added benefits of being divisible, easily transferable, and verifiable. The halving, an event that occurs roughly every 4 years, cuts the rate of new Bitcoin creation in half. The supply shock is a core driver of Bitcoin's historical bull cycles. This predictable, deflationary monetary policy is the engine that drives its long-term value. For the purists, Bitcoin is not about building a new internet or running applications, it's about perfecting one thing and one thing only: sound money. Bitcoin's network is designed for one purpose: secure transactions. It is intentionally simple and slow compared to other blockchains, and that's by design. The priority is security and decentralization. This singular focus makes it the most secure and robust decentralized network in the world. It's a fortress, and its value lies in its unbreakability. And institutional adoption continues to grow, with major players like BlackRock and Fidelity launching Bitcoin ETFs. Bitcoin's role as a legitimate asset class is cemented. They aren't investing in Bitcoin to run smart contracts, they are investing in it as a macro asset, a store of value for their portfolios over long time periods. Despite the hype around new altcoins, Bitcoin has consistently outperformed most of them, including Ethereum, on a risk-adjusted basis. While Ethereum has had periods of explosive growth, Bitcoin's long-term dominance and its ability to weather market cycles make it the more reliable long-term performer. So, if your investment philosophy is about finding a scarce asset that can preserve and grow your wealth over decades independent of central bank policies, then Bitcoin is likely the better choice for you. It's a long-term, low-maintenance, buy and hold play. Now, let's talk about Ethereum. Ethereum is a completely different beast. Its investment thesis is not about being digital gold, it's about being the foundation of a new digital economy. It is a decentralized, programmable platform, a world computer. Ethereum's value is derived from its utility. Its native token, Ether, is the lifeblood of this new digital world. You need ETH to pay for transactions, to run smart contracts, and to power the thousands of decentralized applications being built on its network. Think of it like this. If Bitcoin is like gold, then Ethereum is like the operating system for a new kind of internet. It's the platform on which everything else is built. The DeFi boom, NFTs, and a vast array of other Web3 innovations all run on Ethereum. The transition to a proof-of-stake consensus mechanism with the merge was a game changer. It made the network significantly more energy efficient and critically introduced a mechanism to burn a portion of the transaction fees. This has made ETH deflationary at times, meaning more ETH is being destroyed than is being created. This scarcity, combined with ever-increasing demand for block space, is a powerful recipe for long-term price appreciation. Ethereum also offers a yield. Through staking, investors can earn a return on their ETH, which is not possible with Bitcoin in the same way. This ability to generate a passive income stream makes it a compelling investment for those looking for more than just price appreciation. The network's robust ecosystem is its greatest strength. it has the largest developer community in the crypto space, which ensures a constant flow of innovation. The sheer number of projects building on Ethereum means its utility is always expanding. Its value isn't just in scarcity, it's in its use case. So if your investment philosophy is about betting on the future of technology, on the creation of a new decentralized financial system, and on the network that is building the new internet, then Ethereum is likely the better choice. It's a high growth, high utility play with the potential for massive returns. To make an informed decision, let's break down the key differences. First, there's the purpose. Bitcoin is a store of value or digital gold. Ethereum is a world computer or platform for decentralized applications. Then with the technology, Bitcoin is simple, secure, slow, designed for one function, and Ethereum is much more complex, evolving, more scalable, and is designed to be programmable. With the supply, Bitcoin has a fixed supply of 21 million, while Ethereum has a dynamic supply which can be deflationary, no fixed cap. With energy consumption, Bitcoin is a proof of work, which has a high energy consumption, and Ethereum is proof of stake, which has a significantly lower energy consumption. With volatility, Bitcoin is less volatile than most altcoins, but still highly volatile compared to traditional assets. And Ethereum has historically been more volatile than Bitcoin, but this gap is narrowing. And with network effects, with Bitcoin, its network effect comes from its brand recognition, security, and the market dominance. And with Ethereum, its network effect comes from the massive number of developers, decentralized applications, and users building on its platform. So who wins? The truth is, there is no single right answer. The better investment depends entirely on your personal philosophy and risk tolerance. There are periods in market cycles where Ethereum significantly outperforms Bitcoin, but you have to remember that Bitcoin usually outperforms Ethereum and almost the entire crypto market over long periods of time. If you compare them to stocks, Bitcoin is like the S&P 500, while Ethereum and altcoins are like choosing specific stocks. It can work if you believe in them and understand them, but Bitcoin is a much safer investment that tends to do much better over long periods of time. You should choose Bitcoin if you are a more conservative crypto investor. You believe in the power of scarcity and decentralization as a hedge against a flawed financial system. You want to own the digital equivalent of gold, a robust, simple system that doesn't require you to keep up with the latest technological developments. Bitcoin is a long-term play on a macroeconomic shift toward hard money. Its risk profile is arguably lower than any other crypto as its purpose is well defined and widely accepted. You should choose Ethereum if you are a more technologically optimistic investor. You believe the future of finance and the internet is decentralized and programmable. You want to invest in the platform that is building that future, and you are comfortable with the complexity and risk that comes with a rapidly evolving technology. Ethereum is a bet on the utility and expansion of a new digital economy. Its potential upside is arguably higher than Bitcoin's, as its value is tied to the growth of its entire ecosystem. Or you can choose both. For many investors, the smart play isn't a choice at all. It's a diversification strategy. Holding both Bitcoin and Ethereum allows you to participate in both narratives. You get the stability and store of value proposition of Bitcoin and the high growth, utility driven potential of Ethereum. This strategy hedges your bets and allows you to capitalize on the strengths of both assets. And also, you don't always have to hold both at the same amount. Sometimes you can move some of your Bitcoin to Ethereum or move some of your Ethereum to Bitcoin depending on the phase of the market cycle that we are in. Ultimately, both Bitcoin and Ethereum are foundational pillars of the crypto space. They represent two different yet equally powerful visions for the future. Your job as an investor is to understand those visions and decide which one resonates most with you. Of course, none of what I am saying in this video is financial advice, and make sure to always do your own research. If you want more videos about Bitcoin and the crypto market, make sure to subscribe to the channel. Thank you for watching, and I will see you in the next one.